Hey guys, happy Tuesday here at the home office. I got Bear the dog. I also have the windows boarded up because he is a lunatic and he hates all living things, especially birds. So we're dealing with that. But I wanted to talk to you about a situation that we had come up yesterday, and we see this come up all the time. And it's something that really every buyer, realtor, if you're involved in the home buying process, you should understand this concept. So we're going to call this guy Larry. He's a real guy. We'll change his name. But wanted to go over kind of his thought process, and we're going to look at Larry in two alternate universes. The first, where he's got people that are weighing in on his decisions, and the second, where he listens to the pros and we tell him what the best decision is, and we kind of guide him that way. So every buyer, no matter who you are, no matter what lender, regardless of what you're doing, everybody's qualified for an interest rate that's based on your loan type and your credit score, and it's very specific. It even comes down to like your county, the type of home, all those things. So everybody's qualified for what we call a par interest rate. A par rate is just what you're qualified for. It doesn't cost you anything, doesn't cost the lender anything. It's just what you're qualified for. So in this example, Larry, his par rate is 3.125. All right, that 3.125 rate for this example, we're going to use a $300,000 loan amount. So at 3.125, that's going to be $1,285 a month. All right, that's his principal and interest, $1,285 per month. It doesn't cost him anything, doesn't cost us anything, just the par rate. So in this case, sadly, Larry doesn't have family to weigh in on his options. So he talks to his lender. They say, hey, this is what it looks like. This is what's a good deal. This is what makes sense. And Larry goes for it. He closes on his home. He lives happily ever after. 3.125 rate, 1285 payment. Let's look at alternate universe number two. Larry, in this case, has a big family, and he has very outspoken mom and dad who have very strong opinions on what his interest rate should be. Same exact guy, same exact scenario. He's qualified for a 3.125 rate. Mom and dad weigh in. You have to get a 2.875 rate. It has to start with a 2. If you don't get a rate with a 2, you're getting screwed. It has to be a 2. So Larry has this in his head. I got to have something that starts with a 2. No matter what we tell him, got to be a 2. That's just what he thinks. Mom and dad say so. So, all right, cool. We quoted out for him, 2.875. It's going to cost you 2 points. All right, points or percentage points. So if your loan amount is 300 grand, 1% is 3,000, 2% is 6,000, and so on. So in this case, it's going to cost him 2 points. In other words, $6,000 to get this rate. So we give him the rate. We give him the closing costs. He says, wonderful. Like, the money's no problem. I'll spend the extra 6 grand. Like, I don't care. I got to rate this started with a 2. And so we start to break it down for him. We say, Larry, does this really make sense? You spending $6,000 to get this rate? He says, of course it does. I have a rate with a 2. I said, okay, well, let's go a little deeper than that. What is that rate actually getting for you? Like, what is the 2.875 rate doing for you, other than just costing you 6 grand? And what we find out is that it's saving him $41 a month, 41 grand. So you spent $6,000 to save $41 per month, which means that it's going to take you 146 months, which is like 12 years, to recoup that cost. So you just spent 6 grand. And you're not going to recoup that cost for 12 years, which is well beyond the average time that people stay in their homes. The high likelihood is that Larry will never actually save money because he just spent way more money than he's actually going to save. And so we broke it all down. In this case, he ended up going with the 2.8 rate because that's what mom and dad want. But financially, it was just a dumb decision, just to be blunt. So, that's just very important to understand the difference in rates, and not just the rate, not the number, but what is that rate doing for you? What does it cost, and what makes sense? Because it's not all about the rate. The rate is, of course, important, but you got to dig a little bit deeper and kind of see what exactly are we really talking about. So if you got any questions, give me a call. You have a great week. Bye.